Welcome back to Elements in Focus. So grateful to have you here today. An exciting topic, for us at least, giving it, is protecting your situation against inflation. Now, Big Ben had it right, but was still missing one key category, right? Death and taxes are the only two constants. Jamie and I would like to talk to you about inflation being a third we need to consider. And Jamie, one of our wonderful partners, one of our strategic advisors, and a wonderful individual that helps our families deal with this, is going to walk us through today really the key concepts of mitigating this thing called inflation, the risk management techniques. And so not as much as we usually harp on in this category with insurance, but more thinking of strategy, what to really think about when engaging in your life after work, turning on that income stream in retirement. So Jamie's got a loaded topic for us today, and I don't want to steal any of her thunder. And so protecting against inflation, Jamie, what are the keys we need to be paying attention to? And what is it that we do with our families to help them compete with and beat this nasty little bugger called inflation?
Yeah, and this topic really is very interesting because for a long time, it wasn't a big topic of conversation because it wasn't a very high inflation rate. So we weren't seeing it as prevalent in the last 5 to 10 years. But now, ever since COVID happened and inflation has really taken off, it really has become a center of the conversations that we have. Although we've been keeping an eye on it and watching it, it wasn't something that was brought up in conversation a lot. So really today, what is inflation? What are we looking at here? So in simple terms, inflation is the rise of cost of goods and services over time, and it essentially erodes your purchasing power. Real life example, if you went and got your car serviced and oil changed a year ago and it cost you $100, and then you went and did the same thing today and it cost you $105, that's a 5% inflation rate. So essentially your money is just buying less. Why is this important to retirees? This is really important to retirees because they often live off of fixed income. So a lot of times retirees have Social Security or a pension or just fixed income that they have coming in each month. And that doesn't work well with inflation. Once inflation comes in, then they can do less and less with that fixed income that's coming in over time. Over 20 to 30 years, inflation can significantly reduce what income can buy. For example, if you had a 3% inflation, prices are going to double in about 24 years. So in that retirement frame, if you're in retirement for those 20 years, which is not unlikely, it's not unheard of, the cost of what you're living on can double. So really keeping that in mind is going to be important for your financial plan. Different strategies to protect against inflation. You really want to invest in growth-oriented assets such as stocks or a diversified portfolio because they tend to, over time, outperform inflation. It's really tempting in environments like this where we have some volatility in the market and some uncertainty with what's going on with inflation to just put things in cash because you don't see those assets going up and down and up and down. It feels good to just see it sitting in a savings account, but what we're not taking into consideration is that you're losing that purchasing power. So although you're not dealing with that volatility of the assets going up and down, you are eroding the assets that are sitting in that bank account. So you really have to think long-term at the big picture when you're looking at where to have your assets. Another thing that we really want to look at is delaying Social Security. You can take Social Security as early as age 62. Full retirement age can be anywhere from 66 to 67 right now, but you can delay taking Social Security all the way till age 70. If you wait from full retirement age until age 70, that benefit is going to grow 8% per year. So that's a really good way to protect against inflation for the long term. That income that you have coming in each month is going to be larger because you waited to take it until age 70. So that's something to really consider if you can not have that income before age 70. You also may want to consider some inflation protected assets. This could include TIPS, I-bonds, or real estate type funds like REITs or real estate investment trusts, or commodities. So like real assets that you can invest in, and those tend to outpace inflation also. So different diversification techniques there. And something that you really want to consider is when you're looking at your financial plan, you want to make sure that you have a flexible spending plan built in. You don't want to assume that you're going to take static withdrawals forever for the rest of your retirement. That's going to set you up for failure in your financial plan. You have to be able to adjust your withdrawal rates based on what costs are of living, what cost of life is. So really, to wrap it up, some tips. You want to review your income plan regularly, and you really want to speak with a fiduciary to make sure your strategy adjusts with inflation. So the best way to beat inflation is own things that grow over time and have a plan that grows with you.
Absolutely. Jamie, well said and well done. Folks, this is such a robust topic. It's often the one thing that we don't want to talk about in our arena of planning because at no one likes to talk about the constant, the little rust that's always eroding away our buying power. Because it's fun to talk about the stock market. It's fun to talk about the dreams that we're having. So Jamie nailed it right on the head. This little thing that's eating away at your purchasing power is one of the most significant, and I would say even almost as significant as taxes, Jamie, the little thing we want to plan for constantly and consistently. So if your current team, if you have one, is not talking about inflation on a regular basis or showing you how inflation affects your long-term financial independence, right? You need to have it reevaluated. So if you're getting ready to turn your keys in, like Jamie said, and we're about to start living off of some of this really good, but really unfortunately lackluster when it comes to inflation fixed income, right? We have to combine and pool assets for additional income over time. And you're scared about what that looks like, or you're unsure, or even delaying the next steps in your life after work because of that decision, please call us 800-928-4001. Talk with one of our great partners and advisors like Jamie to have her sit down, walk you through the reality of your situation and how taxes and more importantly, and if not as importantly, inflation can be beaten, how we can do that effectively and efficiently without creating a whole lot of complexity. And if you have a simple question for Jamie or for the team at talk to FEG at yourlifeafterwork.com, please shoot it our way. We'd love to help answer those one-off questions that you have. And then if you're looking for more great content by Jamie, and she has written a lot of content and she has done a lot of recordings and a lot of shows. She's all over the place. Please go to yourlifeafterwork.com and see some of her, again, beautiful content she's created on similar subjects and planning, and even including inflation. And her article will be out shortly that goes along with this. So thank you for your time, Jamie. Wonderful job. Appreciate you going through this. And folks, we look forward to seeing you at the next one. And please don't hesitate to reach out. Take care.